And here we are. We've had a very busy past 10 hours, I believe, when apparently a bank in China declared bankruptcy and the Chinese are trying to stabilize their currency market. Leaving this fundamental to the side, today what we're going to do is we're going to look at the previous bear market evolution for ETH, because it's quite similar to what we're going through. We're going to look at the time frame for how long this movement, this downtrend is going to last, and the signals to be watching for as a confirmation of the change. And we will be doing that on the weekly time frame because this is a weekly move. It's been at the start of the week, I was looking at the MACD and the stochastic on the weekly, and they had turned down, and it's not an easy signal to turn down. But and also I believe that we won't see any change of this downtrend until it finishes on the weekly time frame in terms of the RSI and the stock RSI. Today is a news-free day, which means that we should have our charts acting a little bit, how can I say, Fridays are either very volatile or are sideways. So what I'm looking for to see today in the charts, and I'll show you more on the 1 hour time frame, is a high ADR to low ADR move, and whichever end it stops at, I will be watching for structure. And for ETH, I was looking at it this morning. It looked like the 1 hour time frame had topped out on the stochastic, so I'm waiting for it to hit the low ADR to reset that 1 hour stochastic, and then I'll take a 1 hour swing entry probably to the upside if again we have those if of course the entry is profitable enough, because at the moment no long entry is profitable enough if I want to keep a stop loss. It's too big of a range at the moment to be taking an entry without with a stop loss. So I know that Grayscale sued the SEC, again a little bit of fundamentals, but also SEC has actually one piece of news that started this whole thing, and it was at the start of the week, the fact that the SEC has postponed all ETF applications till early next year, till the 2024, and that would be in line with Bitcoin's halving cycle. So the proper lift is expected to start around the first trimester of next year. I don't know if we're going to have any positive news from Grayscale individually suing the SEC. However, I do know that the range that we're in right now for BTC and ETH lends itself to a lot of volatility. It lends itself to an up and down consolidation. So we are likely to see that to see some nice swings in this range, and they are totally worth trading, especially if sticking to a nice stop loss. So could we have some positive news lifting the market? Yes, we could. The S&P did a drop yesterday. Just to continue with the market overview, it pushed below the previous daily low, and at the moment while the stock on the daily for the S&P is quite low, there's still space to go. There's still space to go in the regular RSI as well, and there are a lot of bearish divergences that haven't been corrected yet. It looks like the 200 EMA on the daily would be the support for this. So we could expect some more downwards movement from the S&P today. Once it's out of this EMA cloud, it needs to get back into it. So unless the 50 EMA is regained as support, we'll probably see a back test and a drop. If it's gonna do that back test and drop, if it's just, it might just continue down. In which case, if it does continue down, what I'm looking at the moment, it's quite odd the way we have this shaped on the daily, because I'm trying for the S&P to identify the M formation. So what exactly is the M formation? Is this the M formation? In which case we need to break this previous low, push low, and then lift and push lower. So that would be the path. That would be the way out of this peak formation. If this is the M formation, if this one here is the M formation, since we have 3 peaks, 3 swings to the upside, if this one is the M formation, again, what we need to see is the first thing, breaking the previous low, which we've done, and then a push away from it, because that would be M formation, push away. This would be level 1. Then lift up and back test, and this would be level 2. We hit level 2, we backtest again, and then we have level 3, and that would lead to a correction for the S&P. And this is what, again, is healthy and expected, especially after this amount of bearish divergences. So again, we'll keep an eye on it. I don't make any trading decisions based on the S&P, but it is in the back of my mind as a trend. Sometimes it's one step ahead our coins, and it's good to see that. It's good to see, to watch it for direction. I'll clean this chart later. Now, let's have a look at the DXY, the dollar. Now the dollar has been trying to get above the 200 EMA on the daily, and it hasn't really done so successfully. At the moment, it looks like a topping out formation, similar to what happened here. But we do have the support of the 5, the 13 EMAs, the 20 EMA, and the 50 EMA on the daily. So as long as these hold, we can still keep going to the upside. We need to break this previous high to be out of this space. We haven't broken it yet. Let's see if today is going to do it. And again, when that happens, it'll probably mean a push down for our coins. Again, the DXY has been a how can I say, on some days it reflected the inverse correlation with the coins, on others it didn't. So I'm taking it with a pinch of salt because of where we are right now. I believe the final stages are, again, it's the first time I'm witnessing this and I'm trading this, the final stages of a bear market. And I'm making a huge assumption in this. Could we have a super extended bear market and a world recession? Yes, we could. But if this is the final 3 to 5 months of bear market, it's, as it happened previously, it is a shakeout period for traders and investors alike. So long-term holders will be shaken out, and traders will be shaken out as well. That's why I take two approaches. I made 2 adjustments to my trading. First, I switched to a higher cap coin, ETH. It has less of smaller ranges than XRP or other smaller caps, but higher range than BTC, and also more clearly defined levels, easier to read in times like these. And second, I am trading a lot less, and I'm trading on the 4-hour. I am doing more position trading at the moment and holding back in my DCAing, because shakeout moves can be very dangerous. Like last night's move could have liquidated my whole position if I didn't have a tight stop loss on it. So it would have been a bloodbath to anybody that had taken long signals, because it went through levels in 15 minutes. So my point is, avoiding over trading and switching to a higher time frame right now is better in terms of noticing what's happening. And if, again, I'm looking at the moment because of the bigger space that's opened to change back to the 1 hour signals, but using them for the 4 hour trades as I would normally use them. So how can I say it? But I would still be watching the 4 hour for context. Okay. Now let's start with the general ETH bear market analysis, and then we'll switch into the weekend levels, because that's where I want to put most of my energy in. Okay, so I switched to Bitstamp, and even on Bitstamp on the weekly, we don't have too much information. This would be the previous 2018 to 2020 bear market. And I know that some people take this as an individual bear market, but I'm taking this whole thing as a bear market because this here didn't break the previous low. Now, weekly levels are a little bit harder to map out. Let me change to the weekly. To map out than daily levels because of how the swings overlap each other. And the big question is, are we 2 levels down or are we 3 levels down? That would be the background question, and that would be the question that will be on our minds if we get to break this previous low. The reason why I'm starting with that question is because, again, in times of FUD, there are people calling for, let's say, $500 or $600 ETH, which would be a spectacular opportunity. But we'll have that conversation if we break the previous low. If we don't break the previous low, then this is considered a double formation, possibly a triple bottom formation for a lift, as it was here. So I'm pretty sure, for instance, when we got to this space here, people were calling for a breakdown. Even when we got to this space here or this space here, people were calling for a breakdown until the previous bottom breaks, and it breaks so convincingly. We can be talking about anything less than what we've seen, which is the 850, 890 mark. So that's the general background. Now, if I'm looking at the weekly time frame and I'm considering what happened previously to lift, is we had two things. We had a double test of the 20 EMA. And by a double test, I don't mean the touches, I mean a swing actually breaking it and confirming above it. So we had two such swings. After each of these swings, a major correction happened. So 2 attempts to break it, 2 corrections. When did it break? It broke a 4th time, because I'm also taking this swing as a baby swing. It broke the 3rd time when we had the crossing of the 20 and then the back test of the 20 and a higher high. So we need 3 things to confirm, 3 signals to confirm this exit. One of them would be the crossing of the 20 over the 55 EMA. The second one would be the higher high with reference to the previous high in the consolidation. And the third one would be the back test of the 20 EMA. These 3 things to me are essential to call this a lift. And that's why I, at the start of the past week, because I've only done one ETH position over the past 2 weeks, that's all that has presented to me. And I admit I was a little bit not narrow-minded. Yeah, well, I'll say narrow-minded. inflexible because I kept on looking at the weekly as my reference, and the weekly had supported, the weekly had all of these three signals. So it had the higher high, it had the 20, it had the back test. However, what it didn't have was actually the swing count, because we have the breaking of the 20 in this swing, we have the breaking of the 20 in this swing. We have one correction, we don't have the second correction. And I know, again, Elliott wave people will say, oh, this is a zigzag, or this is an ABC, or this is a this and this is that. They might be slightly different because this peak was higher than this one, whereas in this consolidation this peak was lower than this one. So this could be a nice ABC, whereas this is something else like a zigzag or whatever. Again, I'm not going in there. I like to count my swings. So where are we in terms of attempts to break, and where are we in terms of correction? And we are one correction behind. So I chose to take the upswing position, thinking that we are gonna see a lift, a higher lift, and then continuation. But it didn't happen like that. I was also wrong on the timeline, because this is this swing here, this lift here marks the proper lift out of the bear market, because it holds the previous level of support and resistance, 30th of August, or a little bit later, 14th of September, so the space of 2 weeks. This was the lift because it held the level on backtest. Here we're not holding any level on backtest. We are not holding the 20 EMA on the weekly, and today I can confirm, as it's looking today, that we have started what is very similar to this, the second big correction of the bear market. Now, this is the reason why I'm starting with this presentation. I might be proven wrong. There's no way of knowing the future in these circumstances, but I can look at the previous pattern. That's the thing that I can do. I can also look at the fact that the stock RSI and the regular RSI on the weekly are down. The regular RSI has crossed the midline, and the stock RSI has crossed in order to come down, and it was rejected at the midline as well. So with this in mind, it confirms that this would be it. We need another swing to the low. What did I want to say? Yes, the last thing that I want to say is the duration. I was wrong on the duration, because from the start of the bear market till the confirmation that we're lifting in to the bull market, till all the three signals happened. First, the crossing of the 20 over the 55 on the weekly, then the higher high, then backtesting and holding the 20. It took about 658 days. From the previous start of the bear market till now, we are 450 days. So we are about 200 days away from this happening, if we are again to compare that this is going to happen. Now, technically, if you look at previous BTC years, halving years, runs, bear runs or bull runs, you will see that the last quarter of the year is traditionally to the downside, and that would be confirmed in ETH in the previous analysis as well. So another 3 to 5 months of downside, and that would coincide with the start of the new year's lift, and again, maybe the SEC approving ETFs, or any such miracles, positive events happening. So this was a bull trap. To me, this looks like a bull trap. We've had beautiful signals flashing for go in, go in, go in, and then in the space of a day, we saw a, let me just tell you. I measured it, but I forgot because I kept on measuring this whole morning. So 15%, almost 15% drop in the space of a day, and that happened very quickly. I think there was a 15-minute candle that wicked a lot of people out. So that's where we are. That's what I believe is going to happen. Just as a context, now in this space, in the space that we're in, let me just take you to a smaller time frame now. This is the space that we are in. This is the 4-hour space that we are in. And at the moment, what I expect to see, let me just remove our structures because we don't need them anymore. This didn't break the previous low. So not breaking this previous low means that this could have been an ABC correction, and we could see a back test of the previous level. Now, because of how it broke, I expect the previous level to be a little bit higher in line with this, and I actually expect this to be like so, a triple top formation, a head and shoulders. I'm sorry, I don't, my verbal skills today are terrible. So this is what I expect. If I am to look at, have we done 3 steps down? These are all 4-hour swings. Have we done 3 steps down? Yes, absolutely. I believe these are the final 2 steps done in a push. What we need is to back test this previous level. Again, I was looking at the same area, similar area yesterday. 1720 was the area I was looking at yesterday. It might not come all the way to that place. It might stay in this space, 1620. We will have to see. The 20 EMA on the 4-hour is left behind, and it's at 1768. So I think it will get tested before we move down. I'm not going to enter a trade unless I have some sort of a short position, unless I have some sort of level that's hit. The best position for this trade that I missed would have been here. I was in this long here, and it was looking great until it didn't. I didn't stay adaptable through this consolidation. But that's me, and that's my summer haze mind and busy mind as well. So now I would be looking for a back test to short. However, where we are right now, we are in the middle of this range. There is no way I'm taking any position in the middle of this range. We have 2 options. If we're looking at how big the range is, this is a 7.2% range where we are right now. Absolutely great to trade on the 1-hour entries. So this would be a 4-hour trade on a 1-hour entry, 7.2. Great. If we're taking the whole space that opened up right now, last night, it's at 14%. This is fantastic. Now, every time we have, I'm going to be very patient. There's generally 1 4-hour trade every week. If I don't get an entry today, Monday, Tuesday, next week, I'll probably have one. This huge wick here, wicks create areas of interest for liquidity in the charts. I believe that we will return in the space of this wick today, tomorrow, at the weekend, on Monday. And what I'm looking to wait for and to enter is a W formation that would take me to a back test of the previous area and the previous shoulder, as it would be. So something along these lines. But we have a nice range at the weekend opening up for us. I will be at the charts this weekend, and I will be, if I see a W formation on the 1 hour I am looking to enter, I would probably be waiting for, considering how I am so sorry, guys. My mind is absolutely slow today. I'm looking for a lift up from the space once it gets there. I'll put a path into it. Where's the? Imagine. There it is. Okay. So if we are here. Okay, so this would be what I'm waiting for in terms of movement. I'm gonna make it yellow. A swing up and a swing down. We will for sure return in this area. I don't know if we're gonna return in this area today or tomorrow. It looks, by the look on the 1 hour stochastic, we might come down today because it's been up here for a while. I also, yeah, so the point I'm trying to make is I would like to be waiting for this entry here. The reason being, this W formation is quite unstable as it forms after this amount of volatility. And I know there is the percentage here for a stop loss is quite high, like it's at 3.2% below the support line. It's very, very high. So I would be waiting to have some sort of support higher up confirmed and entering that 1 hour swing there at the next level and following it from level 1 to level 2, possibly getting away here, letting it do the 3, 4, 5, and then waiting for the top out formation, because we are going to be in a big space that will be quite advantageous to trade. Let's see what we're offered. Again, it's August and it's the end of August, and a lot of institutions are on holiday, and by institutions I mean a lot of funds are on holiday. So volumes are still down. We need to see if this volatility is going to be maintained over the next week. Even if next week is going to be a little bit on the less volatile side, I believe September and October will be bringing in some nice swings. So back to our weekend levels. I'm going to start our weekend levels with ETH, and then I'm going to move over to Bitcoin. There was no technical, I want to say that there was no, I was more than happy to pivot after I was knocked out. I was knocked out on this wick here. I was more than happy to pivot, but there was absolutely no backtest of the 20 MA or EMA on the 4 hour, no backtest of the previous support, just the current spill. If I change to the daily time frame, you can see that this has moved into the space below the 200, and I'm expecting it to consolidate below the 200 as it did here. So I expect the same thing to happen. Nice swing down, swing up, swing down, swing up, swing down. I expect that to happen. So my areas of interest, okay, let's take this box. There we go. My area of interest is the previous low and the 20 EMA on the 20 MA on the 4 hour on this chart, because I like watching the MAs right now. Generally, when the MAs stay fanned out like this, they signal that a backtest is going to happen. Again, we need to see how it's going to move today. I don't expect this previous low to be broken today. 1470 and 1760, 1780. Again, with this range that we're in, and this being so high in percentages, I am very mindful to be waiting for the second step of that W formation, the back test of the previous support, and getting in on that rather than right at the bottom of the W, because the percentage is so high, and it's not worth putting my, again, for 3%, it's, you put a sixth of your position in. It's too small. So I would be waiting to put a higher position with the same risk higher up. Okay, so this is the range. That's the space that we're in, because we have a Friday nice level day. Here we go. So as you can see, this Friday we haven't yet hit the low ADR. And we have hit the high ADR. So Fridays are generally from the high ADR to the low ADR. High ADR has been hit. I expect the low ADR to be hit, and we might actually see the M1 get hit. So if we've started the day at where did we start? Where's the, yeah, we didn't start it at the M3. We might stop at M2, or we might continue down. We are above the pivot point and the daily open of the day, so chances are we might see the M3 get hit and then push down to the M1. That might happen. This is not for me to trade right now because it is quite uncertain. It's just a wick. What is this? No structure is there on the 1 hour time frame. I also want to show you, yeah, there's a lot, there has been a lot of market manipulation by market manipulation I mean market maker moves, because their money has actually gone in the money flow index. And the reason why I stuck to my long position here is that 3 times they had put money in here, and then in here when I went in, and now it's the 4th time. So not once has money been taken out. They've been building longs all this while, which means they've been again selling into buying into the market. So as the market dropped, they bought, as the market buying the dip basically. But we do have a bearish divergence on the 4 hour and not yet a bullish one. I'm waiting for the 4 hour to turn bullish to look for an entry. That's my previous one that I've already posted. Once I see the potential for an entry, you know, I'll be posting it as a way to show you how I manage the entries and how I calculate them. Okay, that's it. That's ETH. Let's have a look at BTC. BTC is out of the daily range. It's looking absolutely dreadful on the daily MACD. Sorry guys, I'm so sorry. I'm going to take you back to ETH and the weekly pattern on ETH because I have a significant bearish divergence on the weekly that I forgot to tell you about, and I want to tell you about it. So it's this is between this low and this low, and here is the momentum and here's the momentum. So as you can see, momentum is lower, prices are staying higher, but momentum is lower. This generally indicates that there will be more downward movement on the weekly time frame. That was the bit that I didn't want to leave out. And now I can move on to the daily pattern on BTC. So the target for this daily move is in line with the golden pocket. ETH has already done this. ETH has already hit the golden pocket. I posted it this morning. It's already hit the golden pocket. BTC is only down at the 382 level, so we can expect some more movement downwards on the daily level. Yesterday's candle was a high volume sell candle, generally signifying reversal, but at this, again, we don't have any structure for reversal, and that would confirm again if this is yes, so that would if we do confirm it, we're looking at the same triple top formation, 3 swings high, 3 swings low at the top of this. But if we don't reverse and we continue lower, we are looking at this being the M formation, pushing down, back test, push down, back test, push down. So that's what I'll be looking at on the daily pattern. Again, not to trade it, but to watch it as a trend. Here we are. We broke back under the 27k area, and the next level to watch for is the 25k. There's loads of liquidity around that. ETH has already ETH is moving more explosively than BTC. ETH has already reached this level, so the equivalent of the 25k has already been reached for ETH in terms of movement. And this is why I'm gonna wait to see BTC hit the 25k, because we're likely gonna see a double bottom formation for ETH around the 1480 1500 area. So the market is probably gonna wait for BTC to do this correction as well. The space that we're going to be in is the same space as I mapped it out for ETH. It's going to be between 27k and the 200, the 20 MA on the daily. So 29, 27 as the midline, 25 as support. It's a very generous range. We need to see entries in this in these positions. Again, the best entry for this short would have been this final back test of the 50 MA on the daily. This was a clear rejection here. It was a bit deceiving because it had broken the previous high, but it didn't actually confirm the next day. So I'm doing a mea culpa here because I wasn't flexible enough to see that this was a rejection. I kept looking at the daily stocks and I kept looking at the 4-hour liquidity moving into the chart. So I was biased as to an uptrend in terms of the signal. So I'm not using bias as a personal thing because I was constantly checking if I have my 3 S's to stay in it, and I did. But that's the makings of a nice drop. So anyways, that's it from me. I hope I didn't waffle too much, and if I said too much and you have some questions, do let me know in the chats. I'll be posting these levels right after I hang up here, and I'll see you guys around New York time today. If there is nothing new to be posting around the end of New York, I'll be posting